100% hack on how to know when an explosive move is about to happen in the marketplace. What's up with you guys? It's your boy U Kings right here. You're welcome again to another day with an ICT Forex trader. Okay, my name is Kingsley. I trade ICT concept and I document my trade on this YouTube channel. I also share my Forex educational knowledge. Okay, so please, if you are new to this channel, do well to subscribe. Okay, just take your time, subscribe, and also turn the notification bell so you're notified anytime I upload on this YouTube channel. Okay. So today I'll be sharing with you guys how to anticipate an explosive move in the market before it happens. Price actually moves in both in contraction and expansion, right? It will move in contraction. At times it will consolidate, that is ranging. At times it will expand. Okay. Now, how will you know the day that we are going to have an expansion in the marketplace, right? How will you know that okay, after this now, after the close of this candle, that we are going to see an explosive move in the marketplace? So now today I'll be showing you guys how you can do that. A hack. This is a very 100% hack on how to know when an explosive move is about to happen in the marketplace. Okay, so these are the time you can easily catch your 100 pips, 200 pips, depending on the pair you trade. Okay, for example, if you're trading Euro USD, this is how you can easily catch 100 pips, or let me say okay, 60 pips, 70 pips, based on the average true range of this thing of the pair you are trading. Okay, just like pairs like GBP USD, used to expand very well. You'll be catching like 200 pips, 150 pips, 100 pips, So how will you know today is going to be and we are going to have an explosive move in the marketplace? So I'll be showing you guys the hack. I'll be taking it to my chart. But before that, I will show you the trade we caught for the week. Okay, how I determine the direction bias and I'm making the most, right? So let's go to the chart, guys. Hello guys, you're welcome back to the chart. Looking at price right here, this is the Euro USD. As you all know, I trade just one pair, Euro USD, and I said I'm going to be teaching you guys how to anticipate an explosive move before it happens in the marketplace. So we'll be focusing on the daily time frame, but before that, let me show you guys a beautiful trade I will caught this week. All right, this week, this was my anticipation. I expected price because Friday closed as a contraction candle, thereby forming a swing point, right? And I use swing points to determine reversals. Now, externality have been taken right here, like this low have been taken, that is external liquidity, and swing point formed. That means the low of this center candle is lower than the low of this right and left candle. Okay, so it indicates reversal. So when I see this, and it's also a contraction candle, so now I expected an expansion to the upside, right, into an internal liquidity, which is this gap right here and this gap right here. Okay, and on Monday we saw an explosive move to the upside, just as we anticipated, right? Then yesterday we also expected a continuation to the upside, maybe reaching for this gap right here, but it couldn't, and it slanted to the downside. Okay, taking out the Monday low, right? So with this now, this is called a flagship pattern. Flagship pattern is a pattern that takes the high and low of the previous candle. So when I saw the flagship pattern, it indicates reversal because it is coming from an FVG. So that's why we are bearish today, which is Wednesday. So today, that is Wednesday, we are bearish, and you can see prices going to the downside. Okay, I'll be showing the trade we took today. So this is the trade we took in the morning. It's just a simple entry mode that I have shared in this YouTube channel. Maybe if this is your first time watching my YouTube channel, please go down on my video. You will see an entry model. I've shared this entry model and how you can make the move just trading this single entry model. Okay, so looking at price right here, what do you see? You saw that okay, this is our London Q zone on 5 minutes. That was when I caught the entry. So price take out this high right there in 15 minutes, created a shift in market structure. There is a little gap right here, so I expected price to return into it, tap into it, and expand it to downside, give me 1:3R, which is my average target. Okay, and it delivered beautifully well. So I waited on this afternoon after the news. So price took out this high right here. So price took out this high right here. That's a stop point for me. Shift in market structure, it took this low, then it returned to this gap right here. Sorry, this gap is no more here, but it was there. I don't know. This price is fucking up. No, the data is not complete. I don't know, but there was a gap, right? Okay, sorry, there is a gap here. This is the gap. Sorry, this is the gap. So this is the gap. Okay, but if I should take the trade from this gap, right, my stop loss will be very large. Okay, because my average stop loss is 10 pips, 10 to 15 pips. Okay, If I should take it to here, my stop loss will be up to 23 pips. I don't want to do that. What did I do? I waited for price to reach for this other block right here. So price reach for it, and that's why I hopped in to the downside. Okay, so that is giving us almost, it gives us breaking even already. It's running risk free right here because I've changed my stop loss to here. Anything can happen, right? So but this one have delivered beautifully well, giving us 1:3. Alright, okay, though I took this trade on my small account though. Okay, but this is the major trade for the day. So this is our Tuesday trade. Sorry, that was Wednesday trade. This is our Tuesday equals out. It gave us one is to 1 point something area and reverse to the downside and then expanded to the upside in our direction. Alright, but it is what it is normal, right? So that's Tuesday trade, which ended in a loss, and this is Monday trade, just as we anticipated. We expected a buy side. So on a New York Q zone, we saw this entry right here, and it's expanded to the upside, giving us over 1:3 around. So this is beautiful. That's how we trade for the week. So this week so far, we have taken out 3 good trades, 2 wins, and just 1 loss. All right, guys. So back to the topic: how to determine an explosive move before it happens in the marketplace. Okay, so this concept is a concept of expansion, contraction, and expansion. Contraction and expansion concept. Okay, contraction and expansion concept explains that after the close of a candle with a small body range, you should be expecting an explosive move in the marketplace. Okay, I repeat, after a close of a candle with small body range, you should be expecting an explosive move in the marketplace, and most times it is in line with the order flow. Okay, so now what is a contraction candle? A contraction candle is a candle with a small body range, right? Okay, you know, candle is made up of 2 components majorly: the body and the wicks, right? Candle is made up of 3 candles: the body and the wicks. Okay, so you can see it right here, the body and the wicks, right? So now the wicks, we have the upper wicks, we have the lower wick, okay, which constitutes the low and the high, right? Now candles with small body range are candles whose body is very small, right? That is, it has wicks but the body of the candle is small. So these are candles with small body range. So you call these candles a contraction candle. We call it a contraction candle. Okay, so candles with small body range is called a contraction candle. Now after the close of a contraction candle, you should be expecting an explosive move in the marketplace, right? So whenever you are determining a contraction candle, so the wicks are not considered. So you don't consider the wicks in the market in price. Okay, so you don't consider the wicks, okay, whenever you are determining a contraction candle. Okay, so you just focus on the body of the candle. Okay, so after a candle with small body range, you should be expecting an explosive move in the marketplace. So this is the law of contraction and expansion concept. Okay, so I'll be taking you to the chart now. You can looking at the chart now. Let's look for an example. Okay, let's look for an example. Okay, now let me just start from this up right here. So look at what do you see here now. Look at this candle. This is a doji. That is candles with small body range. So after that, what do you see, guys? You see what? An expansion to the downside. So do you see it now? So you can see this expansion candle. So you can see this one, an expansion, right? Contraction candle, expansion. So whenever you see a contraction candle that is more than 2, you right now, what do you anticipate next? An expansion, right? So this is very simple: contraction candle, expansion. Okay, now contraction candle again, expansion. You see it now, expansion to the downside, right? Now again, contraction candle, expansion to the downside. You can see that's rapid expansion. Okay, so contraction candle, you can see expansion to the downside, right? Expansion. Okay, so whenever you see a candle with small body range, the next thing you anticipate is what? An explosive move. You can see small candle, explosive move, small candle, explosive move to the downside, small candle, then return to this, then explosive move to the downside. So okay, so now this is the recent recent data. Okay, recent data. You can see it here, contraction candle on Friday. So Friday closed as a contraction. Sorry, Thursday, Wednesday last week was a contraction candle. You can see it right there. then you can see this expansion to the downside. Okay, now Friday was a contraction candle, right? And we saw an expansion to the upside. Okay, now contraction candle again, contraction candle, and we have an expansion. Okay, so do you see it now, guys? So now today again we have another contraction candle, then I expected an expansion to the downside, and you can see price have expanded to the downside here. You can see it right there, price have expanded to the downside, so you can see it's okay. So I'm expecting price to further expand to the downside because today is not yet done after the news. So I'm expecting price to drop more. Okay, then tomorrow we continue to the sell, okay. So that's the expectation. So it's very, very simple. After a candle with a small body range, it expands. We expect what? An explosive move in the marketplace. Very simple. Small candle, explosive move, small candle, explosive move. Okay, so with this now you'll be able to know the day that is going to expand very well. Okay, the day that is going to be aggressive. Okay, so it's very, very simple. Determine the candles with small body range. Then what you should be expecting next is what? An explosive move in the marketplace. So if you're able to catch from the low of the candle, you will make the most from the market. So imagine we expected what? An expansion to the downside, and okay, let me show you guys something. So just like Monday, we expected what? An explosive move to the upside. Okay, we expected an explosive move. We were able to catch it from here. Okay, we're able to catch it from this low now. So let me assume I want to pull this trade to the high. So this is about 1:6 RR. Okay, so Euro USD don't actually expand much like that. Okay, because of this thing. Okay, but it's a very beautiful RR, 1:6.7 RR. Okay, holding it to almost the high of the day, is it not? So this really makes sense. Okay, and some days we used to catch even from the low of the candle. Okay, you can see this candle now. You see, cut it from here to the upside. Okay, so that is it, guys. Very, very simple now. So it doesn't happen only in Euro USD. If you go to other pairs, all right, let's check the XY so that you can see it. Let's check the XY. So you can see the XY. You can see the XY contraction candle, expansion to the downside. Okay, contraction candle, explosive move, contraction, explosive move to the upside, small body range, expansion, small body range, expansion, small body range. You can see this expansion, small body range, expansion, small body range. You can see this rapid expansion. You can see it, guys. So it repeats. Okay, so go to the chart. Any pair you're trading, just go and test this out. Look out for these things for yourself. Okay, look out for these candles for yourself. Okay, just go to any candle you trade, any pair you trade, right? You can see double contraction candle and expansion. So after a contraction candle, there is always an expansion in price after a contraction candle. Okay, so it happens in any pair. It happens in any pair you trade. Okay, even if you trade crypto, check it out, backtest it, you see that this works. Even if you trade synthetic, check it out. This works. It works, guys. It works. So now let's go to maybe let me check in other time frame. Though it is more effective on the higher time frame. Why? Because you use it to determine the directional bias. Okay, easy to determine the directional bias, right? So that's why it is more effective in the higher time frame. But you can see contraction candle, rapid expansion, contraction candle, rapid expansion, right? So contraction candle, expansion, contraction candle, expansion. Okay, but mostly I use this on my daily time frame, right, to determine my directional bias. Okay, so just like today now, this is a contraction candle yesterday on Tuesday. So Wednesday I already know that we're going to have an expansion to down, so you can see how far the price has expanded to this level before a retracement to the upside. Is it not? On Monday, contraction candle expanded to the upside. Now another question is, after a contraction candle, how will you know the direction price is going to expand to next? It's very simple. What is the current market structure? Okay, what is the current market structure? So if the market structure is downtrend, when I mean market structure, I mean market structure in the daily time frame. So what is the current market structure in the daily time frame? That's how you determine it. But I'll be showing you guys a hack. Maybe in my next video, I'll be showing you guys how you will know the direction price is going to draw to next after a contraction candle, right? How you can determine that with almost 80 to 90% accuracy. 90 to 80% accuracy how you can determine the direction price is going to move to after a contraction candle. Okay, but you can work with these guys. Go to your chart, look out for these things, know how it repeats. Okay, basically you stick to the higher time frame because that's where you use it to determine the direction of the market. Okay, so basically I use this concept on the daily time frame, weekly time frame, to know what I'll be anticipating for the next day or what I'll be anticipating for the next week. You understand? So that's it, guys. So this works most of the time after a contraction candle, that is candle with small body range. What we expect was an expansion in the next candle. Okay, so that is it, guys. Contraction and expansion concept, it works like magic. All right, guys, so I know you have learned a lot from that video. Okay, so do well to go to your chart and look out for these things for yourself. You know that it repeats over and over again. Contraction and expansion concept is one of the technical analysis concept that I use very well, and it works, guys. It works, right? All right, so how you can determine the direction price is going to expand to after a contraction candle, right? I'll be making a video about that in my next YouTube video. Okay, so just get prepared, comment next video, right? And I expect the video to be ready maybe on or before the week runs out. Okay, so guys, if you are new to this channel, please do well to subscribe for your boy, okay, and also turn the notification bell so that you'll be notified anytime I drop video on this YouTube channel. Okay, so to the next time, wish you all good luck and bye for now.